Now, it's a widely established fact that Korea is a very heavily export-driven economy, and almost a quarter of the country's total exports go to one single country, China. Our Hwang Ji-hye takes a look at different areas of the Korean economy where a heavy Chinese presence can be spotted.
Korea's Myeong-dong shopping district is a beehive of activity at all hours of the day, and that activity is driven more and more by Chinese customers these days.
We have more Chinese customers than Koreans because there are a lot of tourists here. They also buy far more products than local residents because they're cheaper here than in China.
And the amount of money Chinese tourists spent in Korea on credit cards shot up over 80% last year to around 3.8 trillion won, or roughly $3.7 billion from the same period a year ago. That's almost half of what all foreigners spent in Korea. Chinese investors have also taken a greater interest in Korea. They funneled more than $1.3 billion into Korea's securities market from December last year through May this year. That's the largest amount of any country. Experts, however, point out the risks of too much Chinese capital flowing into the country.
Chinese investors could have speculative purposes when coming into the Korean market, and if that money exits the country all at once, it could have a major negative impact on the local market.
In terms of exports, which is Korea's traditional growth engine, China's hold on the domestic economy grows even stronger. Last year, China took up almost 60% of Korea's trade surplus, while that figure stood at less than 8% in 1998. Experts add that it's important for Korean companies to continue improving their products and services so they can keep on attracting Chinese customers and their money. Hwang Ji-hye, Arirang News.